Welcome to the Note Investor Podcast. We'll guide you through the ups and downs of note investing and teach you all about the nitty-gritty details of the business that other people won't talk about. Your host, Dan Deppen, is a former aerospace engineer and product manager who transitioned away from cubicle life to full-time note investing in 2018. Our website is www.fusionnotes.com, where you can subscribe to this podcast, comment, and find links to other information on note investing.
Okay, cool. So I've got it streaming on YouTube now, so I'll go ahead and get going. There are also a bunch of people who have joined. So thank you for taking time out of your evening to join this webinar. The reason I put together this webinar is I get a lot of questions on note investing, and I get a lot of the same questions the same time. And one of the ones I get the most is, how do I actually get started? Where do I go? What should I know? What should I start to do? And so I wanted to create this webinar and then, save this recording as a way to provide a pointer for those folks, as it's just become kind of increasingly difficult to do one-off phone calls and things like that. Not that I don't do them, but they can be a little bit of a challenge. So just first to introduce myself. So I'm Dan Deppen. So I'm a very active note investor. I have been for several years now. And while I'm active in notes, one of the things I enjoy is teaching other note investors. So I've made a number of online training courses, and it kind of follows how I've done things in other fields that I've spent a lot of time on. So, for example, like in business school and grad school, I was a teaching assistant. Used to play a lot of poker back in the day and did coaching for that and wrote a book and different things. And so I kind of find that, if you really want to learn something and get better at it, like if you sit down and write a book on it or create a course or, teach other people how to do it, whether it's just through blogging about what you're doing on a day-to-day basis or creating YouTube videos. So I find that doing this makes me a better note investor. So I'm a background in mechanical engineering in the aerospace industry, then got an MBA and, currently active as a product manager. I've been investing for a long time, whether it's been stocks or real estate or other things. Have two girls and have pretty decent sized note portfolio by this time. And also, play a lot of competitive golf. So if you ever want to talk golf, I'm always happy to do that. So you're in the right spot for the webinar if you're interested in how to get started in note investing and kind of some of the basics that you need to know going in. And so one of the other things people need to know when they're starting out, or one of the challenges when you're starting out, is you don't know what you don't know, right? So I kind of always like this Donald Rumsfeld quote where he talked about, there are things that there are things that you don't know, but what can really get you are the things that you don't know that you don't know. And so one of the things I'm trying to do with this video is, if you're brand new to this, expose some of these things to you so it can help get you pointed in the right direction. However, it's not for you if you're interested in what I call the raw notes version of this. So a lot of people, not just in the note industry, but other forms of real estate or other industries, are kind of cheerleaders for it. I guess I sort of am in that way. But one of the things I always try to do is try to, inform people on the reality of the notes business, right? I think the reality of the notes business is awesome. You can get very good returns. It's less competitive than other areas of note investing, but there are also pitfalls and problems. And, if you look at any investment that has the potential for higher returns, it generally carries some risks with it, right? So I don't want to paint the picture of note investing as this, just sort of nirvana where everything is happy and wonderful, right? I mean, part of being a note investor is you're going to have bad days now and then. So I just try to be upfront about that. So for this webinar, I really ask that you, remove distractions and, kind of close those other tabs and be ready to take notes and then ask questions. You can put questions in the chat and I will try to get to those at the end. And yeah, there will also be one little surprise at the end. So as I mentioned as I start off, this is the most common question that I get is, how do I actually get started? And notes, and it's a big question. It's kind of nebulous. It's the kind of question that requires like a longer phone conversation. It's not just like a one line, here's the answer, go do X. So I'm going to kind of start with 7, what I think are essential lessons if you're starting out. This is by no means comprehensive, but I think these 7 things can really help somebody get pointed in the right direction and start getting a little more oriented on note investing. And the first thing I want to say is that when you're doing note investing, you're buying debt, right? And that's different, fundamentally different than buying property. One of the things that folks get confused on sometimes, especially if they're experienced in other forms of real estate investing, is they sometimes think that they're actually buying the property or they have some rights to the property. So, let me kind of explain. So when you're buying debt, you're buying paper, you're buying a loan, you're buying this piece of paper that says, whoever holds this paper, the borrower is going to pay them a certain amount of money every month for a certain number of months. And then along with that, right, is that note is going to be collateralized by a piece of property. So as you're the debt holder, you have the right to collect these payments, right? And if the borrower doesn't make the payments, then you have the right to go through the foreclosure process and eventually take the house back, which is the collateral. So yes, there is a piece of property attached to this deal, and the value of that property and the condition of that property is super, super important. But you're not buying the property itself. So I've gotten questions recently like, if I buy the note, can I pay it off and take the property? And it's like, no. Or, sometimes people ask me questions around, if I buy the note, can I then just do something and grab the property? And the answer is really no, right? If the borrower defaults and then you go through a foreclosure, you might be able to get the property. If the borrower wants to leave, you might be able to come to an agreement for what's called a deed in lieu or cash for keys, something like that. But that's never certain when you buy the property. So even in these situations where, let's say, a loan has been non-performing for a very long time, and I've gone into deals where I know I'm going to end up with the property, but when you're buying the debt, that's kind of fundamentally different. So we need a little bit of a mindset shift versus what we do in other areas of real estate investing. And the second one is that, okay, we're still going to do due diligence on the property. So I just explained how you're not really buying the property, but we are going to need to do due diligence on the property itself. And one of the other things that causes confusion is, most experienced real estate investors, they go, okay, if I'm going into a real estate deal, I'm going to inspect the property and I'm darn sure going to inspect the inside. I want to know everything about this. Well, when you're buying a loan, there's a borrower in the property. That's their property. You don't have the right to go in the inside and inspect it. What you're going to need to do is get eyes on the property, take photos of the outside. You can't go on the property, but you can take photos of it. And from that, you're going to have to make an assessment of the value. Now, you might say, well, gee, how can I assess the value if I can't go inside? And the answer is, it's a major risk, right? So now most times, the outside of the property is going to give you a lot of indications of the condition of the inside, right? I mean, typically they kind of map. Like if you see a bunch of junk in a yard, I guarantee you it's not getting any better on the inside. However, I've had 2 cases in particular where I was really surprised, where the outside looked good. And then when I did end up taking the property back, the inside was a complete horror show. So that's one of these risks with note investing. That's one of the reasons why you can get a higher return. And it's one of those risks if you're going to be involved in note investing. You have to understand that it goes with the territory. Likewise, you can't go talk to the borrower. It is illegal for you to go and talk to the borrower if you don't own that loan. One of the other points of confusion that sometimes new note investors have is they confuse buying an existing loan with, say, when Bank of America originates a new loan, right? So when you could be doing seller finance and creating a loan. That's a different thing. What I'm talking about here is buying existing notes. If you're buying an existing note, you have to make that determination of whether or not you want to buy it, how much you're willing to pay based on the status of the loan as it is, right? So when you're buying a loan, you're not picking a borrower, and you can't go talk to the borrower. And in my experience, the loan performance tends to speak for itself. So I don't actually worry too much about what the borrower has going on these days. Personally, I mean, honestly, I'm not, savvy enough to judge by someone's Facebook page whether or not they're going to reinstate a loan or not. So these are some key differences between other forms of investing. So when we are doing due diligence on the loan, what are some of the things that are really important and that we need to look at? So there are a lot, but probably number one is verifying that the title is clear and the loan is enforceable. So one of the one of these negative aspects of the business where I just mentioned, it's not all rainbows and unicorns, is there are people out there who will try to sell you a loan that has a fatal title defect or some other problem with the loan. Like, let's say the statute of limitations has run out and you can't actually foreclose. I mean, people will go out and try to sell these and present them as enforceable. So verifying the title and whether the loan is going to be enforceable is really, really key. Because if not, you can get, you can lose 100% of your investment potentially if you run into problems there. One of the other things you're going to want to know too, right, is what other lien holders are involved in this. Are there other liens? These could be mechanics liens. If you're buying a second mortgage, I only buy first, but if you're buying a second, there might be a first in front of you. That's obviously important to understand. If you're looking at non-performing loans in particular, and even a lot of performing loans, they often have delinquent taxes. Or if it's been a problem property, the city may have levied, the city code enforcement may have levied fines. There could be water bills. There could be all sorts of other things that, even though the borrower is technically responsible for, if you foreclose on that property and take it back and then sell it, you could ultimately be on the hook for. So you really need to understand all the other liabilities associated with the property. You're also going to want to understand if the property is occupied or not. Now, whether you want the property to be occupied is going to kind of depend on your business model. So in most cases, you're going to obviously want the property occupied. So if you're buying a performing loan, if the borrower's living there, they got a much bigger incentive to pay. Or if you're buying a non-performing loan with the intention of working with the borrower to get the loan reinstated, that's going to be a heck of a lot easier if the borrower is still there. Now, some people have models where they're buying a non-performing note as kind of a low-cost property acquisition. So maybe they want to buy the property and foreclose, and they don't want the foreclosure to be contested. Or better yet, maybe they're just hoping the borrower will sign off on a deed in lieu and just sign the property over. Well, in that case, if the property is vacant, that's going to be better. However, I'm here to tell you, I've only dabbled in notes on vacant properties a couple times, and I think I got scorched both times. So I have a saying, and that's nothing good happens when a property is vacant. So understanding that occupied status is very important, because the other thing that can happen is when someone who's selling loans sends out a list of loans for sale, it's known as a tape, or usually it's just a spreadsheet of data on each loan. Sometimes they have a column with a list whether the property is occupied or not. And I can't count how many times I've looked at a tape of assets, made offers, gotten them accepted, and then when I got photos of the property, the seller said it was occupied, and you find out it's not. So that's something that's very, very important to check. And then the fourth thing is understanding the performance of the loan. In other words, is it a performing loan where the borrower is making payments every month and the loan is current? Or is it non-performing, meaning they're behind? And then when you get into the non-performing space, it's really not two buckets like I kind of showed on the slide. In reality, there are probably a million shades of gray when you're talking about the spectrum between performing and non-performing loans. For example, like I've owned loans where the borrower is making payments every month, but at some point in the past, they got behind and never got caught up. So they might be making payments every month. It's cash flowing beautifully, but the borrower's like 4 or 5 months behind. You have other ones where the borrower is maybe not paying, but the property's occupied and maybe they've made 1 or 2 payments in the last year. And then you got properties where it's vacant. The borrower hasn't made a payment in 6 years and the property's dilapidated. So when you're looking at judging performance of loans or the types of loans, it's really not a black and white thing. You got to think of it as I like to think of it as just a big spectrum. Okay. And then pricing. Another question I get a lot is, how much should I pay for a performing loan? How much should I pay for a non-performing loan? And unfortunately, I can't really give you great yield rules of thumb, because pricing is really not one price or one size fits all at all. For performing notes, one of the things I do is I'll assume the loan's going to continue to perform and then come up with a price based on a yield. And that yield that I target is going to change based on how risky I think the loan is, right? That's another thing that depends. So for example, let's say you have a note where there's a lot of equity, properties in a great neighborhood, borrowers perform great for years. Well, that's going to be pretty low risk. So I'll be willing to accept a lower yield because it's lower risk. Likewise, you might have a loan that it's paying, but maybe the borrower's a little bit upside down on the equity, or maybe they were non-performing before, they had some bankruptcy in the past, or the neighborhood's kind of sketch. All things being equal, I'm going to want a higher yield on that loan before I buy it. In the non-performing category, it really comes down to what kind of non-performing are we talking about, right? There's non-performing where borrower's there, it's kind of cash flowing, but they're behind. I can get those back on track, usually about 70% of the time. If it's another one where it's vacant, non-performing for a long time, I know I'm going to end up with the property, and maybe it's in an area that I don't want to work in, I'm going to be paying a lot less for that. And the third bucket, really, this kind of comes down to your business strategy as well, right? Like, are you trying to buy notes for cash flow? Are you trying to buy notes for property acquisition? What is it you're trying to get at, right? Like, if you're trying to buy cash flowing notes in a self-directed IRA account and you're trying to beat the yields that you're getting on, say, corporate bonds or treasuries, shoot, that, now you might be just go ahead and target some high quality properties at smaller yields. You're going to be doing a lot better than your bonds. However, if you're, let's say, a fix and flipper and you want to use this as a lower cost way to acquire properties, that's going to have its own pricing model as well. And then in the last category, a lot of this comes down to your personal risk tolerance. Mine is personally probably higher than most. And I, have some scars from that. So you have some, big wins and big losses. For other people, it's much smaller, and that's totally cool. There's nothing wrong with that. One of the fun things about notes is you can kind of tailor the deals you do to your business strategy and your personal risk tolerance. And, you can decide how much risk you want to bite off on these things or not. Just, go into these deals with open eyes, because I have seen note investors where going in, they'll say, oh yeah, I have a high risk tolerance. I'm a real gambler. I understand how this works. I can handle it. And then, like, the first time they hit a hiccup in a deal, not even necessarily like a real problem, but just something got a little weird, they lose their minds. So just understand what your risk tolerance is at the beginning. Okay. And then lesson 5 is to, once you've kind of got your head oriented around here, get in there and buy something. Oh, wow. Sorry. there's a question and answer. So yes, there will be a recording of this available on YouTube. It sounds like someone had to sign off to evacuate. That's awful. So, but yeah, this recording will be available later for anyone who can't stay all the way to the end. Sorry about that. Yeah, so you want to actually get in there and buy something at some point, right? So one of the big mistakes a lot of people make is they get interested in notes. They, start kind of immersing themselves in it, maybe listening to podcasts, watching videos, talking to people, and they do that forever and they never actually buy anything. The other mistake sometimes people make is they fire from the hip, right? And like, I'm going to learn by doing. And, then they may fall victim to one of these people trying to sell a bad note, or they make some mistake that they're not aware of. So it's a balancing act. I mean, I definitely think you want to have a bias toward action. I think that's generally going to benefit with you. Just don't go over the deep end. One of the things I always recommend to people is once you've, kind of got some basic understanding and knowledge, is start by buying a performing note, right? Because when you buy a performing note, you actually go through the process of a note transaction. It's a little different than a regular real estate transaction. You go through a due diligence process, and because it's a performing note, it's going to kind of be lower risk. So if you make a little bit of a mistake, it's probably not the end of the world. The first note I ever bought was a performing note, and I paid too much for it. But I actually still own that note in my IRA. Like, it's worked out fine. And that activity of going through the first process of buying a note, really opened up the floodgates to not just buying a lot more notes, but actually turning it into a real business. The sixth one is, everybody, wants to make money in notes, and that's definitely cool. But don't think of this as, trying to score one home run. I mean, notes in general tend to have higher returns, I believe, than most other forms of investing. So one of the cool things about notes is a lot of your processes can be repetitive, right? I mean, think about this. Once you figure out how to do due diligence, you can do it again and again. Once you get a pricing process down for performing notes or non-performing notes, you can repeat it once again and again. Once you've developed some good sources for notes, you can see a steady supply, right? So I think really the magic in notes is not so much, what some people do is spend hours and hours and hours looking at thousands of notes, buying one, making really, really, really sure that one deal is like the best possible deal. But where you can really make money is by doing volume over time and getting to scale. Now, yes, if you're going to scale at some point, you're going to need outside funding. And I'm going to touch on that a little bit later. That's really not a focus of this podcast. I have other references where I talk about how to do outside funding in the correct way. I'll just throw this in here is, for me, finding funding is actually probably the easiest part of note investing. I know that that's really counterintuitive, but it's true, especially right now in 2021, there is lots of cash that's looking for deals and having a hard time finding deals. So, if you can learn how to buy and operate notes and then learn to scale, the funding will be there when you need it. And then the seventh is you have to actually do something to add value once you buy a note, especially on non-performers. So I know there are some people who teach a model where, hey, all I got to do is hire a bunch of vendors and they're going to do everything, right? Like, I got a loan servicer, they're going to, collect the payments. If foreclosed, I just have to hand it over to the attorney. Maybe I'm going to have a property manager, and I'm just going to hire these vendors and they're going to do everything for me. And I'm just going to sit back and collect a lot of money. And while that kind of should happen in theory, like if all of those vendors did exactly what they're signed up to do, that would be true. But the reality is it's never the case. So one of the things that's so important in being a successful note investor is following up with your vendors and really staying on top of your vendors. A lot of that involves having systems. Like I use Pipedrive for my CRM, and set a lot of reminders in there. And I have other resources where I talk about how to do that. And then the other thing is when you're talking about non-performing notes, right? if you know how to like work out a non-performing note, working out a non-performing note means getting it resolved either through working with the borrower to come up with some kind of a deal so that they can begin paying again or foreclosing or whatever. But if you get good at working out non-performing notes, you can really make a lot of money. Those returns can get very juicy. Unfortunately, it's just not quite as simple as saying, having your servicer do all of it for you like magic. It's supposed to work that way. When you talk to servicers and they're trying to sell you on opening an account, they will tell you that, but it just never quite works out that way. At least it hasn't for me. Okay, so what are some good ways to get started? So I want to give you kind of some concrete steps to get going. So I think, step number one is just getting familiarized with the note world. And, maybe you found this webinar through the process of doing that. So it involves things like listening to podcasts. So I've got the Note Investor podcast. There's also the Good Deeds Note Investing podcast from Chris Seveny. There's some good Facebook groups out there. Bigger Pockets has some really sharp folks on there who have been at this for a long time. YouTube can be a little bit more hit and miss, but there's some good stuff out there too. And also, suggest you subscribe to the Fusion Notes YouTube channel if you haven't already. Just kind of one word of caution, right? If you're spending more than a few months doing this though, then you're taking too long, right? This familiarization process shouldn't take too long. I know people who have been doing this for like literally years. That's not necessarily helpful. So get familiarized first and then move along. And before you actually start buying stuff, you are going to want to have some kind of training. There's just too many nuances and notes, too many little gotchas. It's really hard to do it all yourself and put it together. It's theoretically possible, but it's difficult. And, you'll run into that problem that I talked about a little bit earlier where you don't know what you don't know. There are a lot of ways to get training. There are some mastermind groups out there and live trainings. They tend to be pretty pricey. Some of them are good, some of them are not. There are some folks who will offer private mentoring. I personally don't do that. I just don't have the time or the bandwidth to, but some folks will. And then there are also online courses. And I've created a few of these, and I'll talk about one of them at the end of this. I like online courses because the reference material is already there, right? These usually involve a series of videos and downloads, and then the ability to ask questions. They also tend to be a lot more affordable than some of the live options. And then step 3 is to get in there and buy your first note, right? And a lot of times you're going to want to buy your first note faster than some people think. It's really not super scary. Like if you've done your homework, you've gotten familiarized, you've gotten some training, if you're just going out trying to buy a high quality performing note, you should be able, to know enough to make that happen. And once you get there, realize you're going to be head and shoulders above most of the people that kind of head down this rabbit hole. Most people don't actually make it to the point of buying a note, which is kind of unfortunate and sad. But once you get that first note, it can really open up the floodgates to some financial goodness for you. You're also going to want to build out your network. That's really huge. It's kind of trite to talk about the importance of building a network these days, but I'll talk about kind of specifically what it can do for you as a note investor. Number one, and I do this all the time, is it gives you, a bench of experts you can go in and ask questions, share experiences with. I mean, I have private phone calls with really experienced folks all the time, and I'm always learning things. The other thing you'll find is no matter how much you know about notes, you'll always run into these weird one-off scenarios or new things. I am forever learning new things about notes. Nobody ever really gets to the point where they know it all. Some of this is because laws change. Some of this is just because there's so many different ways these deals can go. In the beginning of February of 2020, right before COVID hit, and I was at the IMN conference in Fort Lauderdale, I was talking to some folks who ran some pretty large hedge funds, that had run into some brand new things that they hadn't seen before. So you're always going to have new experiences, and no matter what training you get, you're always going to need a network of folks to be able to bounce ideas and questions off of as they come up. Your network can also provide an excellent sourcing for notes. Sourcing is the number one people struggle with. It's probably one of the hardest aspects of note investing. It's one of the things I get asked the most about. And especially over the last 6 months or so, most of the notes I've bought have been from other individuals that I'm friends with that do, kind of the same thing that I do, where maybe they wanted to sell some notes to free up cash to deploy it into some other investment, or they had an investor that was looking to cash out. Those deals are really nice. And once you develop that reputation as somebody who is very specific about what they want, and they know that you'll close on certain assets, a lot of the sources will just find their way to you. And then I've also sold notes to my network, right? So when you do get in those, situations where you have an investor that wants to cash out, or you just need money for something else, having a trusted network of folks can be really helpful when it comes to exiting, selling notes as well. And then finally, is a little further down the road, but I really advocate leading towards eventually scaling and building systems to build a larger business, right? So like I started to talk about, notes can be very rinse and repeat, particularly performing notes. So once you've built your systems, as you add more notes, you're adding more cash flow and more dollars to your bank account. Now, but you need systems to make that happen, right? So if you're just doing a couple notes, maybe like 1 or 2 notes in your IRA, less than 5, you can probably just keep everything in your head. But once you start going above that, especially when you start getting into tens of notes, those systems become absolutely critical, because you cannot rely on your vendors to do everything they're supposed to do. And you start getting 50 notes, and if a vendor drops the ball on something, you're not necessarily going to notice. I know, because it's happened to me. That's why I say that. And then part of that scale too is being able to bring outside funding so you can keep going. Okay. So, kind of jumping to the end now. So, what can I do to kind of jumpstart this process? And so I mentioned my online courses. I have the Note Launchpad, which I released back in March. And so I'm kind of relaunching this now. And what the Note Launchpad is an online course with 5 phases to it. So it's got videos, it's got lifetime access, spreadsheets, templates that you can download. Everything's always there. And so the first phase is just learning the foundation. So this is kind of like the Notes 101, the building blocks of learning how to be a note investor. And then in step 2, actually get out there and start buying notes. This is doing things like sourcing, filtering assets, due diligence, pricing. In phase 3, talk about how to actually add value. So how do those loss mitigations work? What are some of the templates that I use for doing that and for staying on top of vendors? And then the 4th phase is actually learning how to scale, building systems and processes, and actually give you all of these systems. So this isn't, because I had done some note training when I started out. And one of the things I was frustrated with was a lot of the information was sort of an overview, and then it was up to me to figure out all of the details. In this, I give you all the details. So I don't tell you, hey, here's a method for pricing, go build a spreadsheet. I teach you how and why the pricing method works, and then give you the spreadsheet. And then phase 5, we talk about how to do funding and how to do that the right way, the different ways to fund note deals, where they're talking about loan hypothecations or partials or joint ventures. And obviously there's a lot of nuance around, doing that appropriately, not just legally, but ethically. And, if you've been around real estate, you've probably seen lots of people get into trouble or get into some bad behavior doing that. So just kind of a review from someone who's taken this course. So, this course isn't a 40,000 foot view of the note industry. It's not an overview or a survey. I kind of provide that in my podcast, but it's an in-depth, step-by-step, firsthand account of what the note industry is and how you can play a part. So, the whole point of this, right, is to be very deliberate and very step-by-step. So the idea is to give you checklists that you can follow. You do step 1, step 2, step 3, on to the end. You'll be able to get there, be an active note investor. So some of the things included on here, there is what I call the Note Ninjas private Facebook group. So even though it's an online course, you are going to have questions and you are going to need help. It's not a full-blown mentorship, but you do have that ability to ask me questions anytime. The Note Foundations program, which is the basics of note investing. It also covers things like how to set up your business, and it's really the note investing for newbies. I also talk a lot about marketing and how to do that. I know marketing scares the pants off of most people, but it's really very easy and will really, really, really juice up the results of your business. And then there's sourcing, which is, the number one thing that people struggle with. And so, in the course, I go over how to find sources, how to cultivate sources, how to build a network, but then also just give you a list of where you can go and buy things right now, right? So while I teach you how to fish and you learn all the information so you can do this on your own, I also just give you the cheat sheet for how to do it. The fast filtering method is when you're going to go through and figure out what your business model is, so you understand which assets that you want to bid. You can get overwhelmed by the number of assets that are for sale. So being able to understand your business model and very quickly filter through a tape is really going to save you a ton of time. And then you need to go through and price, right? And pricing is very different whether you're talking about performing notes or non-performing notes. And I go into great detail on how to do pricing and then just give you the spreadsheets so that you can use them. Loss mitigation, I think, is one of kind of the most important pieces to my secret sauce. So this is learning how to connect with borrowers and get the non-performers flipped over into performers. And then the systems and processes savvy. This is where you get all the templates and cheat sheets and the step-by-step of how to set up your systems that you can actually scale your business. Also talk about outside funding. So it's a creative financing toolkit. So we're into things like partials, JVs, hypothecated loans, and how to do those appropriately. And there's also the funding formulas. We're talking about not necessarily just the specifics of how you implement, a joint venture or a loan hypothecation, but, how to build a network of capital partners where you can really have unlimited capital for your note deals. I've had a line of investors for the last few years. I've always had more investors than note deals available. If you do it the right way, it's actually pretty straightforward to make that happen. So, if you add up the value of all of those, it would be $12,500. That's not what this is. It's not like some of the live trainings. But the way that Note Launchpad works is so you can sign up for it for 12 monthly payments of $200. So like $2,400 total over the year, or $1,997 if you opt in for the full pay. And I designed the pricing so that if you just bought one note, that you would see an ROI back from that right away. So this is designed to get you buying notes within 30 days at a price point that's small enough that if you're buying one note, it will pay for itself. I didn't want to have some of these like $50,000 plus programs I've seen that are out there where it only makes sense if you have millions of dollars of capital to deploy. This was meant for somebody that, even if they did one note, they would be ahead of the game, right? There's also a money back guarantee. I've always had this on all of my courses. So if you sign up for the course and you decide it's not for you, or you didn't think it was as advertised, if you let me know within 30 days, I'm happy to refund. I've actually only had one person take me up on this, and they basically decided they didn't have time for note investing and they never actually logged in to the class. So just know you have that as a fallback. And, the special bonus, as an appreciation for attending the webinar, if you sign up and you use the code webinar, then it'll take 25% off. So it becomes $150 a month for 12 months or $14.97 for the full pay. And if you're watching this, the recording at a later date, let me know and I can honor the 25% discount, depending on where the pricing is, how far in the future the pricing may be higher. But, I did want to thank folks for attending the webinar. So the way to get started, you can go to notelaunchpad.com and join, and then you'll get an email that'll help you get started. So we'll see if you guys have any questions. Let me know. There was just one question earlier about whether or not there would be a recording, and they will. I'll post this to my YouTube channel, and I'm also going to turn it in to a podcast as well. But with that, I will let everyone get back on to their evenings. Thanks so much again for joining. I really, really appreciate it and enjoy doing these things. And I'll talk to you next time.